Welcome to the Divorce and Real Estate Podcast, where we navigate the complex intersection of divorce and property.
Our mission is to provide crucial insights, expert advice, and empathetic support for those facing divorce and real estate decisions.
Each episode will provide you insight into the specific challenges and opportunities available
for your real estate during the divorce process,
along with expert advice from leading professionals in the field. Thanks for joining us. Hi, everyone. Welcome back to the Divorce and Real Estate Podcast. We're so excited to have a guest today, Sandy Krestan with Fairway Mortgage. She is our go-to for all things mortgage. Absolutely all of my clients use her, and we love her. So we're so excited to have her here today. Thank you for joining us.
Well, I'm super excited to be here. I mean, I'm like a little bit of pressure here.
No pressure.
Lots of pressure.
We're just going to have fun chat about divorce and real estate, everybody's favorite topic.
So, Sandy, we've done so many of these together over the years, and helping so many clients out and figuring out just which mortgage is best for them. But when it comes to the divorce side of things, so many more questions that we're not really asked a lot, and your expertise has been so helpful to alleviate unneeded stress and uncertainty for a lot of these people going through trying times in their life. So I think one thing that keeps coming up would be, people are going through a divorce. They are not sure, like, what are the steps? Like, we have a mortgage on our property, and how do I can just remove him or just remove her from the mortgage, right? And I'm like, well, no, you need to speak to someone about this. And that's you. So let's just start there, right? That's typically the first question that we're asked, right? How do we just remove someone from a mortgage? Can you just remove someone?
Well, I think the big part that most people don't realize, and most people don't know, am I even on the note? They don't remember because it could be different from when they bought to when they might have refied. Am I on that security instrument that's recorded at the courthouse? Am I on that deed of trust? I don't know. So I think the big part, it's why I love working with you guys, is, we'll do a little CSI investigating, right? Because the best option for them sometimes depends on where they're at. So I think it's surprising how many people don't know if they're even on the mortgage or on the deed of trust, the title to the property. But I always think it's in that unique position. It's one of the first conversations Kristen and I had was about, I'm like, never just do a quick playing deed, right? Before you get with her, because you just don't want to, if you're on that note, you want to figure out, you don't want to get removed from the title if you're still on the note to the property. So I think the big thing is that, there's steps that I can talk through, but it has to come alongside with both of you guys on where their goal is. And if they're on the note, some of the lenders will let the other person not have to do a refinance, especially if their interest rate may be lower than the current market rates. Where they'll let them just put it in one person's name. Majority of the time with qualifying, they want to make sure, when there's two people on a note, letting one of the people go kind of gives them security. Oh, having two people to go after is better than one. But if you can prove you qualify, it's better, depending on interest rates. There's my asterisk that my attorney will love. That that could be the easiest way. Sometimes it's not easy because it's a toll-free number and it's a call center, and you kind of have to know what to talk about. And that's, we've helped a couple clients that Kristen has had. She sets them up. I'm there to come alongside because they might try to acronym them to death and, put them on hold. We're always about looking out for their best interests.
Okay, so you can, in certain circumstances, remove one of the parties from the note.
Yeah, the loan servicer will sometimes allow you to do that. They don't make it easy, but they will definitely, persistence is your friend.
From
that's a good
standpoint, Asher, just so you know, Usually they won't even approve the assumption until after the divorce is finalized. So like we can assume they can assume if the lender says yes, but then we have no guarantee until afterwards because they won't even let them start doing qualification paperwork until divorce is final. And then in addition to that, most of the time, as Sandy said, assumptions are not available, but they're like this tiny little fine print. So as she said, you have to find the right person that you can talk to. Like an assumption is allowed if it's part of a court order during a divorce. And it's like one of two exceptions. But if you get customer service, they're just going to say no over and over and over again. So Sandy and I both help clients kind of talk to the lender to get the answer, because you usually have to get to an assumption department or a manager. Customer service is usually going to deny you left and right.
And you don't want to just go right to, you're in the middle of the process and go do a refinance and take one person off. And then, that's definitely something that you want to talk to your attorney about, your mediator about, hands down, because it affects, for example, if you went and did a refinance, removing them, and you took cash out, well, and you guys aren't divorced, that can absolutely give your mediator and attorney a stroke.
And it's a good point, because if you agree to something, like I have clients right now who are doing the refinance in the middle of their process, and they have to do a refinance because they need cash out of the house. With an assumption, you're not going to get cash. So if you need cash for a buyout, you're likely going to have to do a refinance. But they are doing it middle of the divorce, which works, except we have to have it in writing, because as Sandy says, they're going to get the cash out. Then whose is the cash? If one of them pays it to the other, but then they argue later that it wasn't paid, it just becomes a mess. So we have to like contractually write it out that that's what they're doing during the process. So there's ways to line it up where it's happening simultaneously for refinance, but you want to make sure that it's written out so that you have a contractual agreement to what's going to happen with the funds or the refinance or whose ownership in the house it is, so that you don't just mess it up for your family law professional or attorney while they're working through the process.
Yeah, especially since like they get with you, the whole idea is to kind of clean things up. And if they don't, let you know everything, it could, snowball.
I think another really good point that Sandy brought up is title. I think we all see this as an issue of like a large majority of family law professionals and attorneys will just transfer title, but leave both people on the mortgage. And they'll just say, oh, we just need to quit claim deed it. For the average person, they're like, that sounds really fancy. Like a quit claim deed sounds super fancy. I just moved all the interest. I'm done. But think about it as like husband and wife, both on the mortgage, husband and wife, both on the title. Wife's going to keep the house. So husband gets rid of his interest in the home by transferring the title, but is still on the mortgage. If wife were to pass away, or if she stops paying on the house, he really doesn't have a lot of repercussion because he doesn't have ownership in the house. He has a loan with nothing to stand on his, legs solidly to say, I own the home, and so I could sell it to get rid of this debt. So it's actually a really dangerous process. Sure, is it the easiest? Yes, but it leaves open a lot of liability. And I know Sandy's contacted us on multiple occasions for multiple people who were like trying to remove people from title without doing it on mortgage. It also can accelerate your mortgage and make you have to pay the entire mortgage now because you messed with the title without telling the mortgage company. So lots of red flags there.
I think that the general homeowner doesn't know the difference between note and deed, and they might intertwine them or think that they're the same thing. And I love that, Sandy, you mentioned that, it's not one or the other. Sometimes it's making sure you're doing things in the right order, understanding there's a difference between being on the note and being on the deed. Which one are you on, right? So you said like that CSI discovery, right? Like you have to really understand, where are you in this? And then Krestan, you mentioned the timing of doing this, either assumption, refinance, right? That matters as well. Like, when is the best time? So I want to help break some of these things down for our listeners. So Kristen, question to you: when is the best timing when someone's doing an assumption? One of the parties is assuming the mortgage.
Mhm. So regardless of assumption or refinance, I usually send my clients to Sandy first to see if they would even be able to qualify and see what options there are. Because even if we can maybe get an assumption, there's no guarantee. So I would rather that they talk to Sandy and understand, what would it look like if I refinanced? What are some other options? Maybe they can assume the loan, but they need a home equity line of credit, HELOC, or other lending or lien against the house to be able to pay a buyout. So I always send them to Sandy first. So then Sandy can have a conversation with them about, would they qualify on their own and can they afford the house on their own? And she usually looks into, again, CSI, the title and the mortgage. Mortgage equal note, title equal deed, lots of same verbiage. And then have her actually give them understanding if it's feasible, because a lot of people emotionally want their home, totally understandable. They can't financially have their home.
So if she says, yes, you are good to assume or refinance at that moment, and they're not finished with their divorce, they're just in that starting point with Kristen, what's that next step for them to make sure that they go through with this in the proper way?
Yes. So assumptions can't typically happen until after the divorce is finalized. So we would need to draft in options. I call them choose your own adventures in your contract. So it says you're going to assume no later than 60 days after the divorce. If you cannot assume, then you must refinance. If you cannot refinance, then you must sell. Because if we only put one option in there, then if that fails, then they have to go back and redraft and refile. And that's just an unnecessary expense. If they're going to refinance or do any kind of loan with Sandy, that's where Sandy and I coordinate the timing, because we've had situations where, for example, one of my clients used Sandy, but used a different realtor that I did not recommend, to each their own. And luckily, Sandy caught that they were trying to buy a house or refinance during the process, and they didn't have the legal paperwork in place to do so. And so Sandy calls me and is like, we're closing in a week. Do we have that paperwork? And I'm like, no, we do not, because I didn't know that was happening. So they need certain legal paperwork. So ideally, they're going to refinance after the divorce is finalized. If it needs to happen during, then we can put certain things in place so that Sandy has the paperwork that she needs. But at the same time, it's going to be a lot of different things need to come into play. So as an example, like support as a form of income. So let's say you're the lower income earning spouse, so you're not making income. Now you need income to qualify. Sandy needs to be able to see all of that and have even like proof of payments. So it's going to really depend on the agreement. So in some circumstances, you can refinance during the divorce. In most cases, you need to wait till it's finalized. It's kind of rule of thumb.
And I think it's important to point out that, interest rates are coming down a little bit. And I know we have record low interest rates on some of the loans, but the secondary market, Fannie Mae and Freddie Mac, do look at somebody being paid off as part of a divorce. They don't make that be the cost of a cash out refinance. So they make that the same cost as a rate and term refinance. So you'll get a little bit better interest rate when it is that you have to buy out, pay off an ex-spouse for that refinance. So sometimes that's better than when they have to separate equity and go get a second mortgage that could be a higher interest rate. So I think it's good that as your mortgage loan officer, I'm going to look at all the options, lay them out in front of you so that you can make that informed decision.
That's why it's really important when we emphasize a lot on this podcast, like choosing the right professionals. And I tell my clients all the time, buying a house any other time or refinancing a house any other time is not the same as going through a divorce. And so, with Sandy having over 40 years of experience now, yes, So she knows all the different options. So I can be like, oh, I think maybe a HELOC could be an option for you. And then I could send them to Sandy, and Sandy runs all the numbers for all the different types of loans. Is that actually a traditional refinance is better? So that's the thing. Like, we all kind of have our own areas of expertise. So it's really helpful to have someone that's going to run multiple options, not just one, or the one that's going to be most beneficial or rewarding to them, because that happens a lot. Gotta love the Zoom features. That happens a lot, and then you're not getting the best option. It's just the professional is picking the option that's the best pay structure for them.
And the big piece is the, when you go to get separation agreements or the divorce settlements, is the income, whether it's either side, alimony, child support. And the secondary market is very, very strict on that you have to have a 6-month history and it has to continue for 3 years. There are a couple resources for non-conforming loans where they want to see a 12-month history. So I think it's important to know upfront your options with who might be receiving that income. Can you refinance with it? Can you go out and get a mortgage? And sooner is always better than later, hands down.
That's another really good point, because, okay, so the 3-year period, you have to receive support for at least 3 years. Let's say you're like right on that threshold. So you're going to receive support for 3.5 years. Well, then you delay having a conversation with Sandy. And then now we don't have 3 years left anymore. Now that, 7 months have passed, now you're under the 3-year term. So now your support doesn't count as income anymore. A lot of people assume that it's going to, like, their child support, but their kids are going to be 18 in 2 years or 2.5 years. Doesn't count. Maybe their spousal maintenance is longer, but their child support isn't. And the other piece is that actually receiving payment for 6 months. So first with that, big issue is, when do they start receiving payments? We have strategically worked with Sandy in the past to start payments earlier than the divorce is being finalized. So let's say they're working with me, their divorce is going to be finalized around December. We start payments in September. So we already have some payments, rather than having to sit around, wait for the divorce to be finalized, and then start payments. But it has to be documented really properly in the paperwork so Sandy can actually use it. And then in addition to that is also, you actually have to receive the payments. So we've all shared clients together where one spouse just isn't paying. Well, if they're not paying, then the loan is going to fall through because there's no consistency of payment for 6 months. So it is kind of relying on some trust between both people that that's actually going to happen, and they're going to initiate those steps in a timely manner. Because otherwise, then, there are restrictions by mortgage lenders and companies. It's not as though we have control over those things.
And it's really part of that, the whole debacle of 2007, where you could fog a mirror and get a mortgage. Everything's back to a qualified mortgage, and that's their income to qualify for that mortgage. So, yeah, you could take somebody back to court, but you don't know how long that will happen and take to happen, excuse me. And so I think it's just so important to just get, to know that it has to be documented. It can't be a picture of cash for being paid. There's very specific, if you think about it, if you were going to write that check for $300,000 and you are the loan holder, wouldn't you want to make sure that people are going to have the money, income, as much as you can, right, to make those payments to you?
Mm-hmm.
That's a big one right there. We've dealt with that. The three of us have dealt with that recently. It is not fun, and we just got to always be looking out for them and have, like, what you mentioned earlier, Kristen, like this choose your own adventure, right? Once the divorce is finalized, we need to have, here is what we're doing. And if that doesn't work, then we need to go to this option, or we need to go to that next option. Because we know that things are not, going to be perfect every time, and things can come up.
Yeah.
Well, and it's not like, oh, I just rely on myself. You're relying on another human to pay you that. And, sometimes humans aren't great.
And I think that unfortunately, a lot of people, they don't kind of take those steps afterwards, after the divorce is finalized. And it's like, you really have to read through your documents and know what your steps are. In our office, like we give like an afterwards checklist so people know what items they need to do, but like we can put you in the right hands and we can give you the right direction and guide you as much as possible. But a lot of people are like, oh, I'm done. Great, don't have to do anything. And it's like, there's a lot of stuff that you have to do. And so just remembering that you have to do those things as you go. I've had people who like, you can't submit the assumption paperwork until after the divorce, but they'll fill it out while we're going through the process. So it's ready to go. Because not even talking about real estate, but like retirement, I've had the situation where clients didn't divide their retirement like they were supposed to. And all that takes is taking the paperwork that I have signed for you and handing it to the plan administrator, like Fidelity or your bank. They never did that. And then he passed away. Well, now it's this major probate issue, and you're spending tens of thousands of dollars of court to argue that a portion of it is hers because they never actually initiated what was supposed to happen. So it's really important that you stick with the timelines that are advised in your paperwork, because you don't want it to be a situation where you go to get a refinance or a mortgage and the restrictions and rules don't let you do so at that time. So
I think another
I have a scenario. Oh, go ahead, Sandy, go ahead.
sorry. I think another big piece when it comes to separation, divorce is monthly obligations. What's on there that one or the other knows about or doesn't know about, or, did it happen prior to marriage, during marriage? And so a big thing with mortgages and the different types of mortgages is that if like on an FHA loan, if a debt is joint during marriage, even if they get divorced, there could be some liability on the spouse if it is not specified in that divorce decree who is gonna be responsible for it. So I think it's really important that everything falls on your credit score, your monthly debts, your total amount of debts to your income, and the thinking that, hey, can you ballpark me a number? Ballparking you a number during a separation divorce, never a good idea. You want to get your credit checked. You want to look at the monthly obligation. We want to look at income. We want to look at the facts that are in black and white and not just kind of ballpark, I'm not sure, this is how I feel kind of thing. Because surprises are for birthdays.
and was that what we would surprise her for birthdays? That's good. Would that be what we classically think of like a DTI, debt to income, looking at it that way?
Yeah, it would. In different loan programs, even though you might be divorced, if it's not in the decree, they're going to have to still count that monthly obligation against the person, even though it clearly was a student loan for the one, but it was done joint, or they secured it, even though it's in this person's name while the marriage was in effect. And an FHA loan will look at that as, that's joint debt, even though it's not joint, it's individual, unless it's specified in the decree who's responsible for paying for what.
That's why we talk about a lot with like paperwork, how important it is to be specific. Like the number of people that even will come to me and they'll be like, oh, I'm just keeping my debts and he's keeping his. Okay, well, what are they? What are the debts? What are the assets? A lot of times documents are drafted really broadly, even by family law professionals. And that's where we talk about in our office. There's your legal process of your divorce and then all the ancillary items that it touches. And so like if your documents aren't drafted properly here, they're going to impact your ability to apply for a loan in the future, let it be for a house or a car or anything else that you need. So it's really important that we actually list all that stuff. I have people all the time be like, well, I don't want to list it because I don't want it to be public, or I don't want to list it because we just agreed we weren't going to talk about each other's stuff. We were just going to take our own. That's okay, other than we still need to list it. So even if it's not like, a full disclosure of the last upteen months of what was in that account, if that's actually agreeable, we still need to list it because there needs to be paperwork so that your mortgage professional can actually understand what's your debt. Because otherwise, you could have debts that you're not even responsible for anymore.
Yeah, and that's one of the good things is like when we check your credit, we're able to securely send it so you can see what's on your credit report, not what you think is on it. So.
Yeah, and that's where a lot of times too, it's helpful to connect like your family law professional with your divorce, with your mortgage professional, because if they just run the analysis with everything that you have, that's different than giving them a sense of like, generally speaking, this person's going to have X, Y, and Z assets and X, Y, and Z debts. It's not solidified right now, but that's better than saying, I don't know what I'm going to have.
Well, and that's how the three of us so closely work together is I can get you pre-approved, but then we have to estimate real estate taxes. We have to estimate homeowners association dues. We estimate a mortgage amount that we can give a max payment for. And that's where they get with Asher. And it's like, okay, well, we're going to look at this. And now those real estate taxes are now twice as high as what we had estimated for that person for their feeling comfortable. And it's, you would think, oh, I just need one person. I think that's the cool part about how we do and what we do as a circle of professionals that not only are talking to you, but we're all talking with each other. So we get to the end zone and get you to where you want to go.
Yeah, the strategy is huge, and the communication between the three of us for the client, making sure the timing and what's happening, and it's so important for them. And I think they get it. They know it's a very highly sensitive subject and type of transaction. Most of the time we're dealing with people that are needing to sell and then buy during a divorce. Sometimes they're not in that position though. Maybe they're just renting and the lease is coming up, or the landlord has pretty flexible situation with them. And one of the parties, look, they're going through a divorce and they have some goals and they're like, hey, I'm done renting. I'm done with this other person. I want to buy, right? And the timing of that purchase has to be done with a sensitive way as well. What would you say, Sandy, in regards to there's nothing to sell, there's just a purchase going on right now? Same thing, debt to income, just on that one person, talking with Krestan, figuring out if there's any spousal support going on, same type of situation for that type of person in that situation?
We're definitely gonna go look at their credit scores, their monthly obligations, make sure that they know, what's showing up on that. Looking at their income. Another big thing is how many people don't have all of their proof of income. They don't have their tax returns. They don't have their W-2s because the other person did it. They don't even have, like, I just give my pay stubs. And so I think it's a matter of, when you get with us, we give you a list of what to gather up. And it's really a best practice to have that available because you need to show your income, you need to show your assets. And it's, you could have to have a couple year tax returns. And I've been with people going, I have no idea where our tax returns are. They did them, whoever they is, right? So it could be an accountant, it could be other spouse. So I think it's important to know what documents you need for your goal, whether that's, buying, refinancing, and have that be part of the, what you get. And that's what Krestan is so awesome at, is being that calm voice in a sea of emotion with our clients and helping them not only prepare emotionally, but prepare with the paperwork. Because even though it's 2024 and we're so AI and everything else, there's still paperwork. And you have to get it together because you're relying on a soon-to-be ex-spouse or ex-spouse on things that you're going to need for your future.
A good tip for people too is like, so as part of your divorce, you have to do financial disclosure. if you're already getting 3 months of statements and 3 years of taxes and all of those things, it's essentially the same paperwork that Sandy needs. So it's one of those things where you're doing the work, but it has two purposes. In our office, we're collecting that mutually together with both parties. But let's say you're litigating and you're in court and you have attorneys. Keep track of those disclosures, because a lot of times what happens is disclosure happens between the two parties to the attorneys. The attorneys let you know that it's there, but most people, particularly if they're not really focused on the finances, they're like, oh, it's just another document set that I got. But that can be a really good resource too if you're the out spouse when it comes to finances. You weren't as involved with the finances. You can also reach out to your attorney about your disclosures, particularly if it comes to like tax returns that your spouse did or something in that way. Again, you're already doing that work, so why double up? And if you're not in a comfortable relationship with your former spouse, then that could be an option too. They may have already submitted a lot of stuff that you need to your attorney. So why not start there, get that information that they already submitted and organized rather than trying to go out and find it. So double up, two birds with one stone.
And I get it. It's a super emotional time for a lot of people. And while you just want to go file that email away or not print it, there's still best practices that you walk them through to actually read. I mean, it's crazy how many people sit and e-sign documents with a little tap on the phone or on their computer and they don't even read anything.
You're supposed to read documents before signing. Is that what you said?
Shocking.
So, I know that we kind of threw a lot at you there, Sandy, and you're a pro. You already know this in and out. I did take a few notes here of just kind of high level items that I just wanted to have like as a recap. But before doing that, were there any other like tips and tricks or just things to take note of? You already gave so many gold nuggets away, but was there anything else that you wanted to mention as we wrap up, or if there was a question that you had, Kristen, for Sandy?
I think the big thing is, and I say this to all of my clients, I can't fix it if I don't know about it. And I'm like their built-in therapist, bartender, psychologist, loan officer, all wrapped in one. And I'm here as their Switzerland. And so it's tell me everything. Sometimes it's going, get me some of the paperwork. I'm going to literally consume it. I'm going to ask a lot of questions in the consultation, and it's not to be nosy. It's because there's going to be one answer to one of those questions that's going to help me find their way into a home. That's where the secret is. And I think, thinking that, oh, I'm going to hide this, it's 2024. We've got our little friend Google, we could go and find out anything. But it's better just to open it up. And, if you tell us there isn't anything that can't be fixable, sooner rather than later. I think that's the big piece is, we get it. It's personal. And, but knowing as much as the facts as I can know is always going to put us in the best position.
Well said. Well said. Couple things here to wrap up. So first, it's important for people to know if they're on the note and or the deed, knowing the differences between the two. The note is the loan, the deed, right, is tied to the property. So know what you're on and know, what the best next steps for you are by working with Sandy and Kristen in regards to the timing and knowing what your rights are and what is the best next step for you. So that's a big one, right? Sandy, you mentioned something that it went so quick, and I want to make sure everyone heard this. So when someone is refinancing in a normal situation, there's two types of major refinancing options. It's the rate and term, which is you're not taking any money out, you're just getting a better rate. The mortgage amount staying about the same, right? But you're going to have a better payment, lower payment each month, typically. That's why people do refinances. So the other type is a cash out refinance. And when you do a cash out refinance where you're taking money out, you can pay someone off it, you can pay debts with it, you can go on vacation, you can do whatever you want with it. But typically that type of refinance is going to maybe be a little bit higher of an interest rate than a rate and term. Is that correct?
That's correct.
But when someone is going through a divorce, there are sometimes exceptions where you can get a rate and term interest rate when doing a refinance, but you are taking cash out. Is that correct?
That is correct. We could
That's a
do
piece of
cash
gold
out,
right there.
like cash in hand to do buyouts. And then it's treated as a rate and term refinance, so it has a lower interest rate compared to a cash out refi.
So what happens if someone's going through a divorce, they're not utilizing a loan officer like yourself and not using you to make sure they get a better rate, right? I mean, these are really key elements that we're hoping that everyone's taking away, right? Huge, huge gold nugget there for everyone of why they need to call you and make sure they're not just doing the right things, but also saving as much money as possible in the meantime, right? Timing. We talked about a lot about timing, and really the best timing to do anything is typically just making sure that all parties, all of us know what's going on, so we can help with what would be the best timing for what you're looking to get out of that situation. And you don't want to do things too just rashly. You need to strategize, and it might be more than one strategy session to make it make sense based on you not maybe having all the information you need for Kristen, myself, or Sandy to review, then to provide a really good strategy for what you're looking to do. So a lot of timing and making sure that we're not just making quick decisions, right? What are some other things that you guys wanted to leave with?
Something I'd highlight with the timing, you have to strategize and get your ducks in a row during the divorce, then we can wrap stuff up after. So a lot of people, what they'll do is they come to all of us after the divorce is finalized. And it's like, they want me to fix things that were done. They want to somehow get a mortgage, but their documents aren't drafted correctly. They want to buy a house, but they haven't done any research on even if they can afford it with support. So it's like the strategy and the getting the ducks in the row is during the process, because that's when we have more control over how I draft the documents, how things are worded, what timeline happens for purchase or for pre-approval. Then you can start moving stuff forward afterwards. So just highlighting, don't wait until after your divorce. I want to emphasize that, yes, it's most likely that you're going to refinance or assume after the divorce, but the strategy all comes up before. It's like any professional game. You practice, you get stuff prepared, then you go out and actually throw the touchdown, but you have to actually prepare to do that. So don't think that you can leave it all until after your divorce is final.
Yeah, and it's a big, that whole cash out piece. I can't even tell you how many loans I've done for refinances for people that the LO didn't know that guideline. So the borrower ended up paying a higher interest rate than they really had to. And then they come back for a refi and I'm like, oh, I saw you refi here. Yeah, I had to pay off. And, I can go look at the closing statement and I see they had to do the cash out piece. So I think it's important. Yeah, obviously all three of us, it's important to go look at the experience level, the client care commitment level, and just know that there's a huge piece of this is how well and how much the three of us work together, that we communicate not only with our clients, but we communicate with each other. And that's how things work so smoothly, and just know we're just making sure that we're looking out for their best interests.
Yeah, because sometimes we're mentioning things to each other about the client because the client doesn't always know what to ask. So we're asking those questions almost on behalf of the client. Like, I'll call you, Sandy, or I'll call Chris and say, hey, I heard this is going on in the situation. Are you aware of it? And how does that impact everything? And that could be like that eureka moment of like, oh my gosh, that is fantastic. It could be a good thing, not always bad. That could be the thing that actually saves the day of how we can make sure that the plan is best for all parties involved.
And I'll highlight too, obviously my role is primarily during the divorce process, but it could be that, let's say I have a client who is meeting with Asher to go over different options to buy a house moving forward, or meeting with Sandy to understand options for if they have enough income to be able to qualify. Even if it doesn't work right away, then both of them are phenomenal at providing steps to get there. So like Sandy saying, okay, to be able to qualify for what you want, we need your income up to here and we need your credit score up, and this is how we can do it. Or, working with Asher and Asher being like, so it doesn't sound like qualifying right now makes sense, but we can get you in a rental property that meets all of your needs. And then in the future, we can look at it. So I think the nice benefit is too, yes, we're highlighting the importance of working with both of them during the divorce process because they're so phenomenal at what they do. But that also is something to look at even into the future as you're continuing to shift between different situations, let that be rentals to purchasing to refinancing. And also, I mean, one of the big benefits is just like when my clients come back to me to change their agreements, let's say they need to modify their agreements in the future. It's easier and less expensive to work with us because we already have all your stuff. We already know your situation. We have your base documents. Same thing, going back to Asher and Sandy, even 10 years down the road and being like, okay, I want to refinance or I want to do this. You're already in their system. They already know what you need. They already have notes and everything on what's important to you. It makes it so much cleaner to continue to work with them moving forward on all those transitional changes that you have, because they already know you and they already know your experiences and they already know what you went through and maybe what those issues were at the time, and then can adjust as things move forward. So it doesn't have to be right at the divorce. If you're not ready and you're like, I can't buy a house right now, or my divorce paperwork says that I have a year to refinance, I don't even want to worry about this right this second. Just still get the information. It's just information. It's just calling Sandy and asking, what does this refinance process looks like? It's calling Asher and saying, okay, I'm thinking about purchasing. What should I start doing? Because again, it's all that prep, and then they can help work on your timeline as how quickly or slowly you want to move to that next phase of your life. So just something to consider.
Great session today. Sandy, it was awesome having you on. Thank you.
So much. I'm so honored to be asked and grateful for you guys.
Well, we're so happy that you're here. And per usual for everyone, if you do have any topics that you want us to talk about, please feel free to comment them in the section below and keep coming back for more divorce and real estate podcasts in the future.
See ya.